Hey everyone, happy Thursday, May 29th. It's about 11:20 in the morning on the West Coast, and it's time for another market update. Well, another week filled with tariff drama. First, over the weekend we got news that maybe there's some progress made with the European Union, so that was positive. However, later in the day yesterday, news came down that the Federal Trade Court, had blocked all the reciprocal tariffs, and it asked the Trump administration to basically remove everything they've done in the next 10 days. So immediately when that happened, Dow futures, so overnight trading went up quite a bit. Crypto went up quite a bit because they like that. They tariffs going away, stock market and crypto would like. However, U.S. Treasury yields, which affect mortgage rates, those spiked as well. So bad for us. However, this morning news broke that the Trump administration will be challenging this federal court's ruling all the way to the Supreme Court, possibly by Friday. When that came out, basically things kind of reversed a little bit, where any of the benefits the stock market got went away. Same thing with crypto, but then U.S. Treasury yields came down, which is good for mortgage rates. So we really don't know what's going to happen there. That's part of the issue, is that from week to week, day to day, these things seem to be changing. So the markets don't like uncertainty. So the sooner we get this all resolved, whether there's going to be tariffs, there's not going to be tariffs, whatever it may be, that will be better for the markets because then they can just plan. So another week filled with tariff drama. We also got this week. We got April new and pending home sales. So new is new construction, and then pending is homes that went under contract in the month of April. So first, new home sales, um, they were up almost 11% month over month. That was raised a little bit by the previous month was negatively revised, so it wasn't up quite as much off the original number. Year over year, they're up 3.3%. Medium sales price is 407,000. Which is up almost 1% month over month. And then one thing to keep in mind, there's about 504,000 new homes, new home construction homes for sale in the country, but only 117,000 are completed. The rest are either not started under construction, and a lot of people don't want to buy a home that's not finished. They want to see the finished product. So this was good to see, though, for new home builders, definitely picking up some of the slack. Because on the other side of things, pending home sales, so homes that went pending, didn't close in April, but went pending, those dropped quite a bit. Negative 6.3% month over month, negative 2.5% year over year. Current sales pace about 4 million. And keep in mind, pending home sales. So these are people that, it would have been, April 2nd, I believe, is when the tariffs went in effect. So, mortgage rates are high. Tariffs are making people uncertain. Maybe their 401k that they're going to use to help buy the house, has been affected quite a bit. So, it's not shocking that April pending home sales have been quite low. So, like I said before, the sooner we kind of get tariffs under control and kind of have an idea what's going on, we should probably start seeing these numbers go up, especially if we get any sort of positive move in mortgage rates, because as we know, any sort of move in mortgage rates is definitely upped activity, which is good. More activity is better for everybody. So again, tale of two different reports here. New home sales great, pending home sales bad. So that was interesting to see. Next thing we got March appreciation. So again, there's two main appreciation reports we look at. We look at the Case-Shiller, which is the gold standard, and includes everything. And then we look at FHFA, which does not count jumbo loans and does not do cash deals. So Case-Shiller year over year dropped from 4% to 3.4%. So it's still, home prices are still going up across the country, but slowing, that pace. Seasonally adjusted was a little negative. Non-seasonally adjusted was up 0.8%. And then, like I said, FHFA dropped slightly from 3.9 to 3.7% a year over year. And then seasonally adjusted was down just slightly at negative 0.1. So, home prices are sticking in there. They're not depreciating, but they're definitely slowing. And obviously, mortgage rates being higher, everything going on in the economy, can have an effect on there and how people view things. So, again, good for current homeowners that, home prices are still going up. Next thing we got. So today we got the GDP. So the Q1, so this first quarter of 2025, the second reading. The first reading a couple of weeks or about a month or so back, it was negative 0.3. Today it was negative 0.2%. There was some weakness in consumer spending. So Americans, weren't spending as much, was good. So this one at least was, we like this in our industry. So that was, slow down, maybe less inflation. Less inflation means maybe mortgage rates come down. So this kind of spurred a little bit of a rally today. So that was good to see. Don't like to see, the economy struggling, but like we talked about, we kind of need the economy to struggle a little bit if we want the Fed to cut rates. Initial jobless claims. So this has been a really low number. It came in a little bit higher. Expectations was 229,000 new claims. Came in at 240,000 new claims. So still a pretty low number overall, but it's ticking up. And like we talked about, this number, if we start seeing this number spike, that will be one of the first indications that the labor market is definitely slowing. So Again, don't want to root for people to lose their jobs, but something that might need to happen in order for the Fed to cut their rates. Next thing, so where do we stand? So average 30-year conventional last week was at 7.07, and we dropped back beneath 7, which was good to see. It's at 6.97. Maybe it might even come down a little bit more today because we're having a pretty good day because of this GDP stuff. So again, still too close to 7, but it was nice, just to get a little underneath that 7 number. I hate seeing that 7 number. I hate telling you guys about the 7 number. So good to see a 6 again. Maybe if we get our wishes, come true in the future, maybe we can get a 5 in front of that again. That would be amazing. So important dates coming up. We have tomorrow. We get the PCE, Fed's favorite form of inflation. Right now, the market's expectation is not too much of a gain. Not too positive, not too negative. So we probably won't get too much movement out of that. And then next week we get it's jobs week, so we'll get ADP. We'll get the BLS jobs report, which is a big one. Week after that, CPI, and then on June 18th, the Fed meets again and announces their next rate cut. Right now, it's at 2% chance that they cut rates. 98% chance that they keep them where we're at. So I would say it's pretty fair to say that we're going to keep rates where they're at, no cut, which is disappointing, but as expected. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, enjoy your week and we'll have a great day. Thanks, guys.